So before we get started, check out the following links in the description box below as highlighted in the image shown. So you'll be able to get our past papers, our link to our official website, link to accreditations, our link to donation page, and contact details in the description. So once you'll be watching a certain video of any lesson or of any past paper, you'll be able to get all these links, and you can be able to get to download past papers, to reach to our official website. You'll be able to see links to our accreditations so that you can see which authorities have accredited us. You'll be able to reach to our donation page as well as our contact details.
So welcome back. We'll proceed with the last part, 41. In a 3-column cash book, what do the 3 columns represent? In a 3-column cash book, what do the 3 columns represent? This is how a 3-column cash book looks like. Normally we have it like that. Those are the 3 columns. Like that. And of course here we have, normally this is the debt column. This is particulars. Then this is discount, cash, bank. Then again debt. Now the credit side, the whole of this side is debit, then the whole of this side is credit. So this side is a replica of the other side. So we have debt, particulars, then discount, cash, and bank. That's how it is. So this is discount allowed because it's an expense on the debit side. This is discount received because it's a gain, it's on the credit side. Now, in a 3-column cash book, what do the 3 columns represent? All financial transactions, it can't be. B, cash column, yes. Discount received column, yes, and discount allowed column. It has left the bank. It has left out the bank column. In a 3-column cash book, what do the 3 columns represent? It has left out the bank column. So this one is definitely no. C, cash column, bank column, and discounts column. Perfect. This is very much okay. And D, receipts column, payments column, and discount column. We don't have a receipt column and payment column. We have cash column and bank column. You can see this is cash, cash, bank, bank, discount, discount. So it's cash column, bank column, and discount column. The correct answer is C. Thank you. Let's move on. Move on. Okay, this is not deleting, but it's okay. It's refusing, it's okay. So that is C. Let's go to 42. Desmond Oloch had the following transactions for the month of December 2023. Sold goods to Paul Saget worth 600,000, net of 25% trade discount. Sold goods to Venus Wanja 300,000 after 33.3% trade discount. Bought goods from Moses Karinchu worth 400,000, less 40% trade discount. And from Matthew worth 320 after 50% trade discount. Made cash sale to Susan Mukali and Zado Kotieno, 150 and 250 respectively. Perfect. Calculate the total sales for the period. Total sales for the period. This is quite straightforward. So sales. Of course, here we have sales. So we are going to consider this. Sales, we are going to consider this. And made cash sales, we will also consider this. This is bought. These are purchases. So this is nowhere. We will not utilize this information. Yeah, he bought from and he bought from. So the whole of this information is worthless. Good. Having determined that, now let me just delete this. That is worthless information. So we'll use 1, 2, and 4. The other thing we need to know that is very crucial, and we'll decide whether you pass this question or not, is that trade discount is normally not considered whenever we talk about sales price. So the net price is normally the list price. Net price, this is very important, is equals to list price minus trade discount. So we cannot talk of the net sales price with trade discount. Trade discount is not recorded in the books of accounts. So that means we are not going to consider all these trade discounts. It's as simple as that. And that leaves us, now makes this question straightforward. Sold goods to Paul Saget worth 600,000, net 25. This is useless information for the sake of record keeping. We are going to consider this 600,000. Sold goods to Venus Wanja worth 300,000 after that 3.3 trade discount. This is useless information. So we will not consider this. We will pick this 300,000. So in short, calculate the total sales 600,000 plus 300,000 plus, because it's total sales, it involves all this, yeah. So 600 plus 300 plus this cash sales 150 and 250, 150,000 and 250,000. You are done. So this is 900 plus 400, 1.3. So check, do you have 1.3? We have it here. So that is it. We're done. So this is the correct answer, A. A is the correct answer for that question, arrived at as 600 plus 300 plus 150 plus 250. And the reason is very simple, that trade discount is not normally considered for accounting records. Cash discount is, but trade discount, no. So we'll pick this as the sales price, 600 plus 300 plus 150 plus 250. That gives us 1.3. Thank you. 43. The long-term assets that have no physical existence but are rights that have value is known as, yes, we have long-term assets that have no physical existence but are rights that have value. True, we have that. What is their name? Current assets? No, current assets cannot be long-term assets. Fixed assets is the same as long-term assets. Intangible assets, this is very much correct. Investment can have physical existence. So the answer is C, which is intangible assets. Intangible assets. Intangible assets. And actually fixed assets are long-term assets that are tangible. And investments could also be it depends with the nature of investment. But to be on the safer side and to answer this question, no physical existence, but are rights, intangible assets. That's very straightforward. So for 3, the answer is C. C is our answer for question 43. Let's proceed. Question 44. An accurate, consistent, and relevant valuation of stock is essential to ensure that financial reports show a true and fair view of the trading activities. In that regard, inventory should be valued at accurate, consistent, and relevant valuation of stock. Yeah, we normally value stock. You remember the FIFO, LIFO, NIFO, weighted average method, simple average method. All these are methods of valuing stock. Most of these methods, actually, they value the stock in most cases according to how the value that the stock has come in. Yeah, like FIFO, the value of the stock, LIFO, the value of the stock, NIFO, the value of the next incoming stock, W. And why the value of the next incoming stock? Why do we keep on changing? Because the bottom line is that we don't want to overstate the value of stock. That is the most important thing. We want to capture things as they are, but of course all of them have disadvantages and advantages, and that's why we have quite a number of them being used here. The one that is commonly used is LIFO, first in, first out. Between first in and first out and LIFO, last in, first out, most organizations will choose which one to use. But anyway, let's go back to the question and see what the question wants. Accurate. I think the word here to underline is accurate, consistent, and relevant valuation. is essential to ensure the financial report show a true and fair view of the trading activities. In that regard, inventory should be valued at the higher of cost or net realizable value. No, it can't be the higher. It's not in line with the prudence concept. Strictly measured at cost. Yes, they are measured at cost, but not strictly, because sometimes the cost is high and it doesn't show. You know, if the cost is high, you acquired goods at a higher price and the market has dipped, then it means you'll be overstating the value of closing stock, which is not good. At the end of the day, it will not show the accurate value of financial reports. So the word strictly comes in as a deterrent to this answer. Then number C, the lower of cost or net realizable value. This sounds as the best. And net book value, not really net book value. At net book value, what is net book value? Value as at that particular time. Okay, the right answer is, see, this one also 50-50, but the right answer is C. C comes out strongly as the lower of cost or net realizable value. The lower of cost or net realizable value. This one comes out as being a very strong answer. We go with the lower of cost. In most cases, we use the cost. We use the cost. But if the net realizable value will be lower, then it's preferable that we go with the net realizable value. Which account does insurance expense belong to? Which account does insurance expense belong to? Is it personal account? No. Personal accounts involves names of people. Names of people, like debtors. Nominal account, yes. Nominal account is made up of expenses and revenues. So this could be the correct account as well. Then C, real account. No, real account is about assets, tangible. Tangibility is an issue here. Tangibility, and mostly talk about assets. Asset account, no. This is an insurance, it's an expense, so it cannot be an asset. So what is the correct answer? The correct answer is B, nominal account, because nominal account basically handles all the expenses and covers the expenses and revenue. So this is the correct answer. Which account does insurance expense belong to? It's a nominal account. Personal account involves names of people, or involves people like debtors and the group, creditors. Real account is items that can be touched. Nominal account are intangible in nature. 46, Tausi Traders provided the following bank transactions for the period ending 31st December 2023. Bank statement balance at 31st December 2023 was a debit of 250,000. Cash book balance as at 31st December 2023 reported a debit balance of 250,000. Okay. What was the difference between the cash book balance and bank statement balance? Wow, this is a very nice question. Very challenging. It's quite challenging. So, bank statement balance as at 31st December was a debit balance. Now, a debit balance in your bank statement shows that you have an overdraft. So it means you owe the bank 250,000. You owe the bank 250,000. That's what a debit balance means. Ideally, if you will be having money in the account, then we need to be talking about a credit balance. So if you have a credit balance of 250,000 in your bank statement, it shows that you have money. But if you have a debit balance in your bank statement, it shows that you don't have money, and instead you owe the bank 250,000. You are supposed to pay the bank 250,000. You are in deficit of 250,000. So bank statement balance as at 31st December 2023 was a debit of 250,000. So this means you have a balance of 250,000 negative in the bank according to the bank statement. Cash book balance as of 31st December 2023 reported a debit balance of 250,000. Now this is real money. Cash book shows that you have 250,000. This is your money. Debit balance in the cash book, in your cash book, shows that you have 250,000. Now, in your cash book, you have 250,000. In the bank account, the bank shows that you have an overdraft. You've overdrawn your account by 250,000. So then the question asks, what is the difference between cash book balance and bank statement balance? It is 500,000. It's 500,000. The 250,000 that you claim to be having as per your cash book, and the 250,000 that you owe the bank, that makes it 500,000. So let's see if we have that option. Bank statement showed 500,000 higher than cash book. This is not correct. Bank statement showed 500,000 higher than cash book. That is not correct. That's not what, it's not correct. It's not what I've explained. B, cash book showed 500,000 higher than the bank statement. This is correct. Cash book showed 500,000 higher than the bank statement, because the bank statement is negative 250,000 and the cash book is 250,000. The difference is 500,000, and cash book is showing 500,000 shillings higher than what the bank statement is showing. So the answer is B. This is correct. The balances were the same. They can't be the same. One is negative, the other one is positive. One is, you've seen, they're not the same. One is an overdraft, the other one is an asset. The 250,000 shillings, since the bank statement balance starts from 0, no. So the answer is B. The answer is B. The answer is B, good people. It's quite a challenging question. Quite a challenging. I know some of you might still take time to understand that, but that's how it is. That's how it is. If you have money in the bank, it's normally called credit balance, not debit balance. Debit, it's an overdraft. So the difference is 500,000, and cash book is showing 500,000 higher than the bank statement. Is okay. So 47, which of the following transactions will appear in the bank statement only but not in the cash book? Standing order, perfect. This is very much okay. Standing order is an instruction to the bank to pay a certain amount, come a certain time. So it will always reflect in the bank statement. In the cash book, we don't know unless we see it from the bank statement. So this is already the correct answer. Which of the following transactions will appear in the bank statement only but not in the cash book? It's a standing order. And let's see the rest. Unpresented checks, no, this will appear in the cash book because not in the bank statement, because you've captured it in the cash book, but in the bank has not yet captured it. The bank has not even received the check. Accounts as long check entry, it will appear in the cash book, not in the bank statement. Uncredited check, it will appear in the cash book, not in the bank statement, because the bank has not yet credited that check. So the answer is A. Perfect. This is very much correct. Then 48, a document prepared to authorize and describe an expenditure is known as? A document prepared to authorize and describe an expenditure is known as a payment voucher. That is the correct answer. Cash memo, no. Bill, no. Debit, no. So the answer is payment voucher. Payment voucher is used to authorize and describe an expenditure, because it's in a payment voucher that you'll have to describe the expenditure, the date, and the authorized signature must sign against a payment voucher to allow that money to be paid. So it's a payment voucher. 49, a dash is sent to the supplier when goods are required. This is a repetition. We saw this, we talked about this. The answer is B, purchase order. A purchase order is sent to the supplier when goods are required. When you want goods, send a purchase order. You can't send a pro forma invoice. Pro forma invoice is sent to the customer. Not to the supplier. Goods receipt note, once you receive the goods, and here we are talking about when goods are required. Debit note, correct and undercharge. So the correct answer is B, which is purchase order. Lastly, but not the end of our revision, is question 50. And before I do question 50, you see, today is a holiday. I'm here. I'm here taking you through this. And there's a lot of power consumption and a lot of stuff. If you don't mind, if this will help you, you can also just, we have you can support us. And the information on how to support us is on our YouTube channel, just up there. We have the pay bill number and we have the account number. You will have supported us greatly. This thing is quite expensive. So you can always support us and you'll be blessed, because this information will continue reaching so many other people. Thank you. Back to question 50. In the absence of a partnership deed, the following will be done, except 1. No interest is charged on drawings. This is perfectly correct. If we don't have a partnership deed, no interest will be charged on drawings. Assets and liabilities are shared at 5%. Who say this? This is wrong. There's no partnership deed. So how did you arrive at 5%? This is definitely wrong. In the absence of a partnership deed, the following will be done. Unless there's a partnership deed that will now dictate that you share assets and liabilities at the rate of 5%, this is not there. So let's continue. Profits and losses are shared equally. Yes, if we don't have a partnership deed, this is the fallback position. They are shared equally. No interest is allowed on capital. Yes. So if we don't have a partnership deed, everything is done like we assume everything will be done equally. No interest on drawings, no interest on capital, the fallback position. But if you want interest on charge on drawings, then come up with a partnership deed and decide how you are going to charge the interest. If you want interest allowed on capital, come up with a partnership deed and decide how it will be charged on capital. If you want profit and losses shared according to the ratio that you want, then come up with a partnership deed that will show how much you are going to share. But if you don't come up with a partnership deed, we will assume the fallback position, the bare minimum, and those 3 ticks are the bare minimum. So the answer to this question is B. That is the exception. That is the exception, and that's what the examiner is interested in. So the correct answer is B. B is our correct answer. Bye. Let's meet in the next paper.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions. And also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.